Hello and welcome. My name is Valérie Thijs and I am the host of this podcast series, The Growth Factor. During the podcast, I will talk to experts about the different stages of entrepreneurship, the challenges that come with it, and the goals we have, of course, to grow. From starting your business to the growth phase and to maintaining your strength during turbulent times. Each episode, we discuss the different phases with few experts who will answer all my questions. So it will be inspiring, informative, and a little bit of fun. I hope you're ready. I would like to introduce my two guests. We first of all have Karen van den Driessche, welcome, and Ignace De Keyser. So my question for the both of you is, please introduce yourself. Karen.
Thank you. As you mentioned, I'm Karen van den Driessche. I'm an industry thought leader. I have over 25 years of experience in treasury and global roles in multinational organizations. I am currently the VP Group Treasurer at Ontex, which is a Belgian listed company. And I have been President of ATEB, which is the Belgian Association of Treasury Experts, for the last 7 years, have been a member of that association for, I think, over 25 years. So have been in the treasury world for a long time.
Lots of experience. And then we have Ignace.
Hello, I'm Ignace, indeed, head of large and international corporates. We have in scope with the team, it's a stable, dedicated, experienced team, the Belgian corporates, but not many of them no more. So we also do some business for our colleagues in the other countries who wants to do pan-European programs involving companies in multiple jurisdictions. And we also are active in what we call the LBO segment, so leveraged buyouts, where we are used to finance or working capital for the target companies or even in the frame of an acquisition. So trying to get liquidity to the acquiring company.
I heard words like treasurer, ATEB, so please explain what is ATEB here?
ATEB is, like I said, the Association of Treasury Experts in Belgium. It was founded a little over 30 years ago by a group of like-minded treasurers who actually wanted to exchange ideas, best practices, experiences. And so from there, ATEB was built or let's say started. And our mission is really to make sure that people can in all in integrity, but also in confidentiality, share best practices, experiences, and our aim is to actually develop the treasury profession and make sure that treasury professionals can exchange ideas and best practices so that they can become better treasury professionals. I think the idea is that as long as you can talk to each other and exchange ideas, you will learn from each other, because it very much is theoretical. There's no official treasury education in Belgium, so you roll into it, but then it's based on the experiences that you learn from each other, that you get better and that you actually become a real treasury professional. How do we do it? We have regular topics, sessions on treasury relevant topics that are happening. And we also do a lot of networking events, because very often the networking is where you actually get to know each other and are more open to ask questions without sounding, let's say, I don't know if you don't know about it. So that's what we try to do in the treasury profession.
There's not a formal education to become a treasurer, but what do treasurers do?
Well, you have a finance education. I mean, some people have an accounting degree, some people, so mainly finance, because there is a lot of corporate finance in education. And then there are a lot of outside courses, and it's very often a little bit of learning on the job. I mean, it's not rocket science. I think from my perspective, I mean, treasury seems very difficult, but it's not rocket science. You need common sense, you need to have a financial background, and then if you're willing to learn something, there's a lot of people out there that can help you.
All right, talking now about factoring, is it only for larger companies?
That's a very good question, because when you talk to, because in the past I also have experience with small and medium-sized organizations and companies, and often they have the reflex of saying, isn't factoring not for large companies? And then if you talk to large companies, because factoring, there's still a kind of connotation, negative connotation to it. The first time you talk to some people, they say, yeah, but we are not in trouble. Factoring is for companies that are not in really good shape. But if you look at the market penetration you have, the level of large corporates, it's really huge. But I think Arlen will explain a bit further why those type of companies use not only as the single financing source, but as part of their total financing, the total financing landscape. So.
Maybe it's interesting just to start with the first question about factoring. What is it? What do you actually do? Because you said it's not only for larger companies. Maybe they would use it, not use it. I think they might not understand quite well what it is. So could you explain what factoring is?
Yeah, indeed. But if you look at rates, one of the things that is really important that companies grant a certain payment delay. So it means that you have to wait for your money. That's already quite important. So you have to wait 90 or 120 days for your money. It puts pressure on your liquidity. If factoring enables you already to get an advance in a pure standard form, already in advance because if you look at the balance sheet of a company, the asset receivables, so the AR of a company are quite important, so you can liquefy them immediately. But then what you see, larger corporates, they go a bit further. They're also looking for off-balance solutions. We can really liquefy, so the portfolio of receivables is really sold. It's it's a combination of financing and transferring the risk on the debtor to the factoring company, which allows them to have an off-balance treatment. So really what you see, the receivables disappear from the balance sheet, are liquefied, can be used for cash. But okay, today I don't think it's quite interesting to have a lot of cash on your balance sheet, but are used to pay early, for instance, payables, so suppliers, or even if you have short-term credit lines to pay them back. So.
Okay. Now, is factoring sufficiently known by fellow treasurers?
I think my treasury colleagues, most of them either do factoring or have looked at it and have analyzed and decided whether it makes sense for you as a company or not, because it does work for every type or size of organization, but the type of business activity you have might be a reason to do or not do factoring. I'm thinking that maybe this talk might inspire some other treasurers to look at it in more detail, but most of the companies know about factoring. I think to what Ignace was saying earlier is like where there's this connotation of factoring is because you're in financial trouble and you need the cash. I don't think that is, or for me, that's definitely not the case. I think factoring should be seen as an additional funding sources. You have your historical standard debt and finance instruments, and factoring is actually an asset-backed financing, which is in most cases cheaper than normal bank financing, and so it's an alternative source of funding to get your money in quicker.
And are there any disadvantages or maybe pain points using it?
There's pain points in every product that you use, right? Somebody who tells you that it's easy and it will be...
prefer to call it a solution,
well, okay.
not a product.
No, so people who say there's no issues, of course, you buy a new product. So I think there's a couple of pain points. I mentioned it earlier, is depending on what type of company you have, if you have structural recurring receivables, then that is more suited to do factoring than if you are, for example, a project-based company where you have cash in based on milestones. That is less suited for factoring. So I think that's the first point, is could be a pain point or a disadvantage if your type of business doesn't lend itself to do factoring. A second thing might be the discomfort or the that you give your customers, because when you do factoring, you need to ask your customers to pay to another bank account. It's something that you don't like. You don't like to disturb your customers in asking them to change bank accounts. And then maybe an additional one would be, especially from a treasury perspective, it could be, or it can seem quite daunting to set up a factoring program, because the typical standard processes are related to your accounts receivable. It's like the follow-up of how your customers paid or not. It's not a typical treasury activity. So setting up this interaction with your factor is like, how do I send the information? How often? Through which formats? What do I do to indicate in my accounting system that this invoice or this customer is factored? How do I follow up whether my customer has paid or not? So those are really all transactional items that from a pure treasury perspective we're not used to dealing with, and so that can seem like a disadvantage of setting up factoring. So I think it's overcomable, I guess, if you could use that word, because if you have a good factor and company and you can work with a cross-functional team within your organization, including IT, but also including your finance or your credit and collection teams who know the processes, who know the formats, then actually it's not as difficult as it seems. It's just getting over all the buzzwords and what needs to be done and understanding what are the steps in this process, which risk remains with us, which risk goes to the factor, who does what once it's done. Those items need to be documented so that it's clear and that there's this visibility within the organization. And I think that is the biggest concern of most companies, but it's just breaking the process down in simple steps and understanding who needs to do what, and then it can be quite simple.
Yes, so implementing might seem difficult, but once it's rolling, it's easier. Mm-hmm.
But perhaps if I may, because it's understood that it's conceived sometimes inconvenient, but I think thanks to modern cash management techniques, we try to get rid of the inconveniences. And it all depends also on the strength of the company, the organization of the company, how they are organized. They are very, very well organized. You can do more things to make things more convenient for them. But we try more and more really, because implementation indeed, it can be hard, it has to be done quick, etc., etc. But I think if I look at, thanks to the progress that we are making also in types of solutions, etc., that slowly we are pushing the inconveniences back. So,
but in order to push the inconveniences back, I think that's what I was trying to say. It's like it's you need to be very clear. What are you trying to achieve? What is your process today? What do I want to get out of it? And then you can map it down in smaller items. I mean, we did an implementation together a couple of years ago where we actually, for a very big or large organization, did it in 3 months or less, I think.
1 month.
Oh, sorry, I
1
don't remember.
month.
I thought it was
Even
3
better.
months. But when we first started, and that's true, because we came in November and we wanted to have the program up and running before the end of the year. And so, but again, we had the right people on our side who knew what the process was. We had the right partner who was very clear in what it is that we could or could not do, because it's very, if you know from the start what is possible and what is not possible, then you don't lose your time in trying to figure out what can we do, what can we not do.
Yes, and if we can sum up the benefits, what are the benefits?
Well, the benefits is you have immediate access to liquidity. It's easy to set up. And it's an alternative form of financing. So for some companies, it can be cheap because it's asset-backed and it's on top of your financing. For some companies, it can be a little bit more expensive. But I think that's the major benefit. It's additional source of funding.
All right. So you're talking about cheaper and more expensive. How expensive is it?
Well, it really depends on the credit quality of your customer, because I think very often in normal or in traditional forms of financing, you look at the credit quality of the person or the company who actually issues the debt. In this case, it's assets backed, so you're selling receivables. So you look more at the credit quality of your customer, which is usually a pool of customers. So you have better credit quality customers, lower credit quality customers. So you have this overall rate of financing. And especially for highly leveraged companies who have a very significant cost of funding themselves because of their credit quality or their rating, using their customers as a form of financing is actually could be a lot cheaper. And maybe one of the items that I did forget, an additional benefit is that if you do it off balance sheet, your receivables disappear from your balance sheet, you get your cash in earlier. Of course, you pay a fee for that. But in your financial metrics, it's not considered as debt. Mm-hmm. So that has a significant benefit for your leverage calculations. For larger companies who are rated, people cannot forget that from a rating agency perspective, they look at it as debt. So from the way they rate you, they will consider it debt. But if you look at it purely from a financing perspective, it's not considered debt, which could be a significant advantage for some companies.
Ignace, would you like to add something?
Yeah, indeed. I think, but it's a bit a summary of everything that Karen has said. It's quite important. It's financial KPI independent. If you look at normal financing done by banks, that's sometimes not a problem that we have. But if we approach a client and they want us to prepare an offer, a non-binding offer, or something like that, usually a bank, they will ask for the financial information, for the budgets. For us, it's quite different because, these figures are also important for us, but we really look at the value of the assets. Mm-hmm. And that's a very different approach, like Karen mentioned, is that, it's asset-based. So even if the company is downgraded or upgraded, usually, normally, there should be any impact on the financing that we do, nor on the cost. So, and that's an important difference.
So from a client perspective, if they want to start with factoring, what should they do?
Yes, I think maybe you should start.
Thank you, Karen. Of course, they should contact us. There are a lot of companies still having a lot of questions about factoring. Karen already mentioned a few. From an operational point of view, also accounting-wise, how does it work? What is involved? What is inconvenient, etc. So what we always do is a first discussion with the client, trying to understand their business, trying to understand also what they want, because you can restrict it to one company. If you are talking about a set of companies, a whole group, you can do it for certain countries. In which jurisdictions do you want to implement it? So all these type of questions, and then we go more and more into detail. And what we see now more and more is that we try to organize workshops for clients. So involving not only the treasurer or the CFO, depending on the company, but also people from IT. Because we always tell people it's quite easy from an IT operational point of view, but I'm not an IT myself, so I can say what I want. But if you have people of IT participating, they can acknowledge or confirm that indeed, from an operational point of view, it's quite easy. But also the people from legal, the people from controlling, who are managing the relationship with the debtors, even sales. We recently had a discussion involving people from sales as well. So just starting with the whole scope, trying to understand the client's needs, and then afterwards making a blueprint of how the structure could look like.
All right.
I think from my perspective and from an operational perspective, being at the other side, I think there's a couple of questions that you can ask yourself as a corporate before you start. The first of all is, what is your aim? Is your aim to sell your receivables and also sell the risk? Meaning, do you want it off balance sheet, or are you okay keeping it off balance sheet? Because accounting-wise, there's a very different treatment. So I think that is the first step. What is it that you want to achieve? The second part is part of the process of selling your receivables that you also want to, if I can call it, outsource the follow-up of your receivables, because you could very well not want the factor to intervene in your relationship with your customer. So then it's more undisclosed. Because you can have it disclosed and then your customer knows about it, and then it's the factor company who takes over, I'll call it, the collection of overdue receivables. But you could very well say, I don't want anybody involved in my relationship with my customer. I want to keep that myself. And then you purely sell the receivables, but you set up an agreement with the factor company that you continue to service your customers. So those are two, I think, very important elements to keep track of, or to decide before you talk to your factoring company. A couple more. Do you want to implement a big bang? So thinking about larger corporates, very often they have different accounting systems. So is it that you want to do just one company or one legal entity? Or do you want to do multiple legal entities that are all on the same accounting system? That might improve the process. You might only address, 60 or 70 or 80% of your receivables, but the implementation might be a lot smoother if you only look at interfacing one system with the factor company. An element from an accounting perspective, again, is in your accounting system, how are you going to flag that this customer is factored? Because you need to find some indication in your accounting system to say, this is the information I need to send to my factoring company. And so therefore, what flag do you have available, and how are you going to then move your invoices from your accounting system from your own AR to maybe a factored account? So that's where your IT and your finance people come in. Another element to think about is also because of the rates that are being charged, is do you only want to sell your euro receivables, or do you want to sell your foreign currency receivable as well? Because, I mean, again, interest rates are rising also for euro, so it becomes maybe less relevant. But at the time where interest rates for euro were extremely low and dollar was, for example, much higher, you could very easily consider as I only want to factor my euro receivables because it's a cheaper form of financing than my dollar. So those are the type of questions that if you think about it yourself as an organization and already have a high-level idea of what you want to do, then the discussions with your factoring company become more efficient, more to the point, and then you already, instead of starting to think when you have the discussion, you already have a preset idea about also the questions you need to ask your factoring company, which will improve the process of implementation.
Well, I think that's now very clear what our customers should do. However, if they would have other questions, of course, we can redirect them to some of your experts in your team, Ignace. Ignace, would you like to add something?
Indeed, call us. We are always available to have a first discussion about what is possible, what is not possible. One thing I also would like to add to what Karen has said is that we have the luck that we have a factoring presence in many countries. So we are not the only factoring company of the group. So when we see that sometimes clients are working very decentralized, we can serve them from different countries. If they want to one-fits-all solution, centralized, we can do it out of the Belgium. And it's not only limited to Europe. We also do business in the US and Canada, even Australia, so subsidiaries of our clients. I'm not going to pretend that everything is possible, but a lot is possible.
And I think that's very good news for our clients.
Can I add one more thing?
Sure.
I mentioned it at some point in the discussion earlier, but I do think it's important to work with your factor company as a partner. Because if you have questions and you think, can I do this or can I do that? The answer may be no, but it's always worth asking. Because, I have noticed that, again, whether it's BNP Fortis Factor or other factoring companies, are starting really to think more with the clients as to what they can offer. And it's that partnership and that thinking together that can actually lead you to a solution that fits for you as an organization. Because there's no one size fits all. And I think that's the benefit of working together, is figuring out what works for you or what doesn't. And then the last point I would like to add is the Association of Treasury Experts. This is also a forum where if you're not sure and you don't want to talk to your banker because they always tell you what they want to tell you, right? And that's the whole purpose, is like if you have a question about these type of treasury topics and you want to exchange ideas or just understand how would it work in detail, and are they telling me the truth or is there some hidden agenda? That's what we're here for. So reach out to us and we can definitely have this discussion as well.
Well, I think it's very important that our clients know that it's our aim to grow together through those partnerships and entrepreneurship. Well, I don't have any more questions for you today, so I would like to thank you very much for joining me here for this podcast. Thank you so much, Karen van den Driessche and Ignace De Keyser.
With pleasure.
Thank you.
So I've learned today that factoring is not only for smaller companies, it's also for larger companies. It's a way not only to alleviate financial stress, but an alternative funding. Thank you so much for joining us, and I hope to see you soon in one of our other episodes.